Hey folks, welcome to the Contrarian Traders Watch List Sunday show. It is Sunday, September the 13th, 2009. Folks, just to follow up on yesterday's recording, we are currently neutral to bearish on the overall markets. On the S&P 500, we are heading into resistance at the 1050 level. Volume on a weekly basis is declining. Volume is declining, which means there are less and less buyers that are pushing the market higher. What's forcing it higher is manipulation. You have the market makers in the morning that are marking up stocks and then spiking the shorts out of the market. The shorts go to cover, and it gives the appearance that you have buyers in the market until at the end of the day, you look at the volume bars and you see that there weren't truly net buyers out there. So what you're seeing is cause and effect. The cause being the intent to squeeze the shorts out of their positions. The effect, the shorts buy back their positions and cause the market to head higher. This can only go on for so long. So as we head into the 1050 level, watch and see whether or not we're going to get resistance, a whole bunch of sellers coming in and dumping their shares. Will that overwhelm the manipulators on the street? Who knows? We don't know that yet. From what we've seen so far, the government is willing to help finance a major purchase of shares or help manipulate the market to an extent that I've never seen before. So can we proceed higher than the 1050 level? Absolutely. So I'm not willing to go net short here. We are building short positions, but I'm not willing to go net short. I'm going to maintain our long positions, which is what I'm recommending to my subscribers. And we are beginning to accumulate short positions. And we'll enjoy this ride as far as they want to continue it higher. But we're hedging those long positions with short positions. So that way, the one day that the market decides it's going to dump, we're going to be prepared. So I'm going to end this segment. We're going to break out into just audio with the visuals on the charts. So stay tuned, and here we go. Okay, folks, let's once again recap where we stand on the S&P 500. As you can see, as I mentioned earlier, here we are headed into the 1050 level. We didn't touch there on Friday. We made it as high as, I believe, 1048. Yeah, 1048. If by chance we are able to, with this kind of volume, break above the 1050 level, I fully anticipate hitting up to the 1100 level. But beware, there are a massive number of sellers up here. So please be careful. I strongly urge, I said this yesterday, I'm going to repeat it again. I strongly urge you not to open long positions as this market heads into this, in my opinion, what is the final run of this market for a while. So please use caution. Let's assume that we begin to see the market break down. Volume continues lower, and the S&P 500 begins to break below its trend line. If it breaches this trend line here, we are going to look to add, and we may even do so beforehand, depending upon our comfort level. We're going to look to add the, let's take a look at the SDS. Okay, the SDS it's an ultra short fund. It's twice the volatility of simply just shorting the overall market. The SDS is the ProShares Ultra Short S&P 500 fund. You can short the spiders. This is more volatile, so just be forewarned. As you can see, the RSI is beginning to curl under. That doesn't mean there's not more downside here. I fully anticipate to see a little bit more of a pullback. So I wouldn't go running into this on Monday, but this is one of the vehicles that we plan on using. It's a bit premature, so just be forewarned. Keep an eye on this RSI. Just like back here, you saw the RSI begin to curl under and head higher. We'll look at, and here's the price action. And it headed higher. We made a couple of points there, and we backed out of that position as we saw it top out. Let's take a look at the FAZ. FAZ, we've already begun to open up the FAZ, and we'll continue to buy the FAZ as it pulls back to the 22-27 level. If it breaks down, we may just get stopped out of this position, but we're building a position now. And you'll note that the RSI is beginning to hook up. I wouldn't be a bit surprised to see a pullback to form a W formation on the RSI and then potentially a breakout higher. Same here. We're looking at a W formation set up on the FAZ. It bottomed out here on the 22-27 level, rallied. It began to pull back. We began buying, and it could continue to pull back some. Friday was a fairly decent day. We had decent volume, but I'm predicting that we're going to see at least one more pullback on the FAZ, if not a full test of the 22-27 level. Again, this is not for the faint of heart. This is the Direxian daily financial bear, 3 times the BKX index. So it's extremely volatile. For those who do not have the stomach for this type of trade, think about shorting the XLF. That's the next best bet. Far less volatility. So please be forewarned. This is a very volatile trade. And we already are in this position, and we fully expect to add more to it. Our stock of the week, as we go into the week to go short, is Bonton. This is a weekly chart of Bonton. As you can see, you're nearing extreme overbought levels as it becomes parabolic. You have a resistance level here at 986. We closed out the week at 850. So can it head higher? Absolutely. It only takes a couple of mornings to spike in the shorts, and it could be at that 986 level. So we're going to start to look to build positions, and we'll look to get short this very, very quickly. If within the next few days, I fully anticipate being short Bonton stores. Take a note of, on the weekly basis, the volume. It dropped off dramatically last week, and it closed on below average volume. Let's take a look at the daily chart to see how it's setting up. You'll note that it's at extreme overbought levels at, I apologize for having this annotation over the number, it's 83 on the RSI, which is very, very overbought. It can proceed higher, so we never rely solely on any one indicator. We use a combination of things. Take a note how you're seeing resistance come into play here, and these shadow or tails on these Japanese candlestick charts are indicating that we're hitting some resistance. Don't be fooled for a second that some outfit out of the Midwest could come in and upgrade Bonton stores tomorrow, and you could see it spike up higher, or it gets a positive commentary on Jim Cramer. This is his perfect time to come in and upgrade something right when it's starting to top out. Keep an eye as well on the volume. Check out this trend. It's dropping off dramatically. Although on Friday we saw it pick up a bit, just before one, the overall trend is down in the up volume. So we fully anticipate being short the Bonton stores. Let's take a look at the parent index. It's a member of the retail sector, and you'll note the action on the retail sector is beginning to, it appears to be getting ready to roll over. So we saw a little bit of support coming at the end of the day on the RTH, the retail holders. So let's look for some sideways consolidation. I wouldn't be a bit surprised for this to roll over next week. So if you have any questions, please feel free. Drop me an email at Robert@theContrarian.Trader. Be more than happy to help you. And take advantage of our 14-day free trial offer. You can click the link on our comments section here. It'll take you right to the homepage. Good luck and have a great trading week.